Hi, I'm Luke from Disciplined Trader, and in this video I'm going to demonstrate how you can calculate the potential returns from your own trading strategy. So before we can calculate your potential returns, there are a few key things we need to know about your strategy. They are the average size of a profitable trade, the average size of a losing trade, your trading win and loss rate, and your trade frequency. If you don't know these numbers, but you've been keeping like a trading log or have compiled some sort of backtesting data for your strategy, then we can use the results from either of these to quickly work out these figures. If you don't already know these numbers and don't have any form of log or trading record, please don't worry, I'm going to show you how to make one in a future video. For those of you that do have the log or past record, I'm going to demonstrate this whole process with you step by step using some simulation data in an Excel spreadsheet. So let's jump over the spreadsheet now and get started. Okay, so as you can see, this is our spreadsheet, and over in this table I've got a list of trades that have happened through the month of September 2016. Here we have the dates, and then this is the result of the trades. So we've got 15 pip winner, 0 which is break even, 10 pip winner, 20 pip winner, 10 pip loser, and so on. So the first thing that we want to do is fill in this table here so that we can work towards the figures that we need to estimate what returns we will see from this strategy over whatever period we want to estimate it over. So, total number of trades. I'm using Excel here, so what I'm going to do is use some Excel formulas to have this work it out for me. If you're using any sort of journal or you're just not particularly savvy with Excel formulas and don't want to use them, that's absolutely fine. Just make sure that if you're doing them manually that you're doing them accurately. So total number of trades. Basically all I want it to do here is count the number of trades I've taken. So I'm simply going to type equals counter, open brackets, and then just select the range that I want it to count. So if it counts each of those cells, that's it, 34 trades. So now I want to know the total number of winning trades in that same range. So for this one, we can type count if, and then it wants a range and criteria. So the range is the same one, and the criteria you simply type comma, quotation, and we want it to be greater than 0. Quotation again, close brackets. So there are 20 trades in that list that are bigger than 0, which means we've got 20 winning trades. We pretty much want to do exactly the same for losing trades. Count if we want the same range. So this time we want less than 0. There we are, 12 trades. So 20 plus 12 is obviously 32, but if we quickly look down this list we can see we've got 2 break-even trades which won't be counted in these two counts here, which would take us up to 34. So we're on track. Okay, now total number of days. So there's a reason that I haven't entered the date next to every trade if there's more trades taken on one day than one trade. So for instance, on the 1st of September there were 2 trades. I haven't typed the date in twice because basically I just wanted to make this easy. So what we can do is we can literally type counter and get it to count this range here, and because there's not duplicate dates, it will only count the cells with data in it. So there are 19 days there, we know. Okay, moving on. So pips gained from winning trades. So now we want it to calculate all the pips that we've made from winning trades. So we simply tell it to sum if this range. The criteria again is greater than 0, close quotation, and then the same range again, close brackets. So we made 325 pips in the month of September from our winning trades. Now we need to calculate how many pips we lost from our losing trades. So as before, pretty similar, same range, this time less than 0, and then the same range. We close the brackets. So in the month of September we lost 165, but we made 325. So moving on from this now, we can now start to calculate the figures that I mentioned at the start of this video. They are the average size of a profitable trade, the average size of a losing trade, the trading win rate, trading loss rate, and trade frequency. Once we know these, we can then start to figure and make estimations on any potential returns over set time periods that we specify. So this average size of a profitable trade is basically the total number of pips that we made divided by the total number of winning trades. So we simply do sum this number here divided by the total number of winning trades, which is 20, enter. So that's the average winning trade for September is 16.25 pips. We do the same for losing trades, so sum this figure here divided by the number of losing trades. So our average loss is minus 13.75 pips. Now trading win rate and trading loss rate, this is the percentage of the time that you win or the percentage of the time that you lose. So basically we work this out by taking our number of winning trades, which is 20, and dividing by the total number of trades this time. And that gives us 0.59, which is 59%. And we do the same for losing trades, so sum number of losing trades divided by total number of trades, and that gives us 35%. Again, these aren't going to add up to 100% because there are two break-even trades. If we added them in, then it should add up to 100%. If it isn't, there's a mistake somewhere. And then trade frequency, I'm going daily. Your trade frequency can be over any period, so you can say my trade frequency per week is X number of trades, my trade frequency per month is Y number of trades, and so on. The trade frequency I'm going to be using is per day. So I want to know how many trades per day on average I'm taking. So all we do here is sum the total number of trades that we've taken, and we divide that by the number of days that we traded, which was 19. So we're taking 1.79 trades on average through September. Now that we've worked out these key numbers, we can use them to calculate the average profit or loss per day. Once we know that, we can multiply that particular number by however many days you want to estimate your return over. So the first step is to work out the average profit per day and then the average loss per day. So to work out the average profit per day, we take the trade frequency and we multiply that by the win rate, and then we multiply it again by the average profitable trade size that we worked out earlier. That gives us the average profit per day. And then, to work out the average loss per day, we take the trade frequency, we multiply it this time by the loss rate, and then multiply again this time by the average losing trade size, and that gives us the average loss per day. So let's jump back to our spreadsheet and work these out. So now that we've seen how to work out these figures, let's continue. So the average profit per day, all we need to do here is simply sum trade frequency times win rate times average size of profitable trade, enter. So our average profit per day is 17.11. We do the same for losing trades. So sum trade frequency times loss rate times average losing trade, and our average loss is minus 8.68 pips. So using those two figures, we can simply calculate that our average profit and loss per day is 17 minus this number to give us 8.42 pips per day. Now obviously that doesn't mean that every trading day we make 8.42 pips. That's not what it means. It means over that period of a month, on average, that's what we made per day. Obviously some days we'll have made 25 pips, some days we might have lost 10 pips, lost 15 pips and so on, but over the month it averages out to 8.42. So, now we know this number, we can make estimations over set time periods to see what the likely return from this strategy would be. So here we've got 30 days, 90 days, 150 days. So simply all we do is multiply this average profit or loss per day of 8.42 pips by the number of days that you want to estimate over. So for 30, it's simply sum 30 times the profit, which is 252.63 pips. For 90, it's 757.89, and for 150, it's 1263.16. Now you can calculate that over any time period that you want to. All you need to bear in mind is your average profit or loss per day figure needs to be coming from a representative sample of data. What I mean here is, in this example, we've only used a month's worth of data, which isn't going to be very indicative of what's going to happen in the future. It's not going to be that reliable because it's a small sample of data. The bigger sample of data you use, the better. Obviously, this could have been a particularly good month. It might have been a particularly low month. We've no idea because we've got nothing to measure it against. It's just 1 month. If you can do a year, 2 years, 3 years, 5 years, however much you can do, the more you do, the better. But just for this example, we're going to carry on with the month that we've done. Once you get to this stage, you might want to apply a monetary value, so what you trade at per point, to actually get a monetary value of the return that you'd be seeing. So here I've got £1, £5, £10 and £25. Simply all we need to do here is just multiply the pip return for each. If I could type the formula in properly, just times these by the amounts. So as you can see, once we filled out that last part of the table, we can see what returns we would get when trading at these different pound per point values. Obviously, just this is there to show what the monetary return would be depending on what you're trading at. So I hope you found this useful. Like I've said before, the more data you can use over here when calculating these numbers, the more accurate they're going to be and the more reliable they're going to be when trying to forecast what return you might see from future trading. A month really isn't a very good representative amount of time. I would stress that you were probably looking at a year minimum, and then any more than that is a bonus really. So like I say, I hope you found that video useful. If there's anything else that you'd like me to cover or like me to help with, please let me know in the comments or send me an email. You can contact me through my blog at www.disciplinetrader.co.uk. And I'll see you on the next video. Thanks very much.